stocks drift lower ahead of a holiday on Thursday and ahead of an important US inflation print on Friday. Auto and industrial see some gains, while energy and IT trade soft.
Vedanta declares its fifth dividend for the year with a hefty payout of 7,600 crores, of which 5,300 crores will flow to promoters. The move takes the total dividend payout for the year to over 37,000 crores.
And Quess Corp perks up on promoter Fairfax, likely having bought 4.5% stake via reverse book building, while RHI Magnesita gains on a proposed preferential issue of shares to promoters.
Adani Group says it has fully prepaid margin-linked share buyback financing of $2.15 billion. It adds that all corresponding pledged shares have been released. The Adani Group stocks trade mixed.
Good afternoon. You're watching us here on Halftime Report. It's midway through the trading session. I'm Mangala Malu. With me, as always, Sonia Shenoy and Ekta Batra. It's more of the same for the frontline indices, where we open with a flourish, then see supply at higher levels. But today, it's a bit of a twist in the tail. The twist in the tail is, one, the Nifty bank is outperforming. It's holding up with a gain of 0.6%. And secondly, the mid-cap index is doing a lot better than what it was over the last couple of trading sessions. We have advances firmly higher than declines at, two stocks gaining for every one stock which is declining. And if you just take a look at a bunch of, stray stocks, all of them doing extremely well. IRB Infra, for instance, because the Mumbai-Pune Express tollway will, the expressway toll will increase from the next fiscal, which is just 2 days from here. We have Royal Orchid Hotels up another 13% after a 10% move yesterday. We had a brokerage initiating coverage, and we had commentary coming in from Puneet Chatwal on the hospitality industry as well. So a lot of stocks doing well. That's the only twist in the tail. For the frontline indices, it's flitting between red and green.
Absolutely. Very, very quiet, right? I mean, similar to the trend that played out yesterday, I guess, because volumes are low. There's a holiday midweek. There's so many holidays coming up in the next couple of weeks as well. So give and take everything, volumes are on the lower side. But having said all of that, a lot of stocks beneath the surface in the broader markets have been under pressure. So there's definitely, portfolios are getting hit. Just that the headline index is very, very quiet right now.
Absolutely. Well, we're not complaining considering the kind of volatility that we've seen globally. So maybe a quiet day is what we'll take on expiry. But definitely lackluster movement on the Nifty and the Sensex. And not to mention, it's around an 80 to 90 point trading range for the Nifty at this point in time. But what stands out is definitely that the mid-caps have recouped some of their losses. So now we're just about flat on a week-to-date basis for the mid-cap index. Let's see how that pans out for the rest of the week. And the banks seem to be seeing some amount of buying. And there is a slight bit of an outperformance which is coming in for the Bank Nifty, which is up around 355 odd points. So those are a couple of key points to watch out for. Overall, a quiet day of trade.
All right, Ekta, a quiet day of trade, but we do have a bunch of things that we call out for you and add value. This is our special segment, Value Add. We're focusing on Metropolis as India logs a single-day rise of 2151 COVID cases. Ekta, that's the highest in the last 5 months, but are people actually going to these path labs?
Well, we had an interesting conversation with Amira Shah of Metropolis earlier in the morning, where a couple of important points is that they have mentioned that when it comes to COVID cases and COVID testing, RT-PCR testing, they did only around 8 odd crores in terms of total revenue from it. And that's been the range in the past couple of quarters for them. And for most companies, COVID testing was down 80%, 90% on a year-on-year basis. That's because the consumer behavior has changed last year when it came to COVID-19. So they don't see PCR cases increasing at this point in time, RT-PCR testing at this point increasing, because most people want to get tested at home. They want to see if they are COVID positive, negative, and then sort of deal with it in their homes without, the regulatories, authorities probably getting involved to a certain extent. So they don't see COVID-19 playing an important role going forward. On competition, she said that, last year there was a lot of negative perception of competition coming in with regards to aggregators, etc. But there are two types of testing. One is wellness testing, which is basically your diabetes and your CBCs of the world, where that is possibly seeing disruption when it comes to pricing. But it's not really a lot of pricing pressure when it comes to illnesses. Yeah. So illnesses is basically something which is more specialized, and that's probably where Metropolis has more of revenues coming in, and hence they don't don't see pricing pressure coming in from that particular segment. Margins of the company was impacted due to the expansion of labs and not really with regards to the pricing pressure. The fundamentals of the business are strong as per the company and at pre-COVID levels. Inorganic growth, they saw unsustainable prices in the diagnostic industry due to COVID-19. We saw a huge amount of M&A taking place during that time, and now that seems to have settled. They probably won't see those kind of valuations coming back. So that's basically Metropolis. But to take this conversation forward, we have Rahul Guha, who's the MD and CEO of Thyrocare, now joining in to discuss all this and more. Rahul, hi, welcome back to the show. We had spoken a couple of weeks ago, so I'm going to keep that whole pricing discussion for later. Wanted to start with COVID-19 testing and what your experience has been. Are you seeing any sort of pickup in RT-PCR testing?
A small pickup, Ekta, but it is on a very small base. So, even if I go back 4 or 5 months, it's nothing close to what we used to see earlier. Though there has been a pickup in the last 10 days or so. Overall, that's the story. But as I said, it's off a very, very small base.
Can you quantify this pickup that you're talking about?
Again, it's on a very small base, but it's like 35-40%, if I look at the weekly trending average.
Okay, so that's the point that even Ameera Shah was making, that, people are just not testing. They don't do the RT-PCR test. They may have gotten COVID, but they're dealing with it at home, doing the home test, etc. So let's move on then. Rahul, good afternoon. One other point she was making is that last year, the narrative was that the diagnostic space is seeing a lot of competition and there's a lot of pricing pressure. But actually, when you drill it down and you look at the numbers, the pricing pressure was not so much, especially for industry leaders. Is that what you feel as well, that, in spaces like illness testing, etc., there's not too much pricing pressure at the moment? And for your own business particularly, what do you see as the growth going forward?
Sure. Actually, I fully agree with that point. The pricing noise has not really, landed in terms of lower prices for us or for any of our competition. Our price realizations have kind of been the same, I would say, almost the last 4 quarters. Of course, Thyrocare has always been a lower cost testing provider. And so therefore, we have been less impacted, with all the price competition. But overall, I would say, the pricing noise was a bit of a storm in a teacup, I would say. But, and it's not really kind of flown through in the numbers. That being said, I do see, because of the COVID testing and, the awareness about RT-PCR and all of that, actually, we are seeing a lot of people now who never would test for influenza. And particularly now on our H3N2 panels and all of that, actually, we're seeing quite a bit of traction on those. So I think the consumer, while they've understood, viral diseases and because of COVID, that there is some testing around that, but we're seeing actually good pickup on, some of these more viral test markers, including influenza, and that's been doing quite well over the last, I would say, month or so.
So the reason I asked you about pricing pressure is because, there is a lot of competition, right, in this space, especially in the e-commerce space, and B, your own margins have been under a lot of pressure. I mean, there was a time when you used to enjoy 30% plus margins, and now that's dwindled down to about 20% or so. I take it that there are industry dynamics at play as well, but can you tell us, since you're saying that there's not too much pricing pressure, what could the average margin performance be for the company in the quarters to come?
So we've always been guiding to about 30%. Actually, if you take the net one-offs, which is, the ESOP charges and all of that, our normal operating margin is in the 30% range, and we expect that to continue into next year as well.
All right. Take that point. Rahul, you actually preempted my question with regards to the jump that you've seen in influenza testing, etc., because of the prevalence of H2N3 now. How much would that be as a proportion of overall testing for you right now? That's point number one. And secondly, now that people are aware of all these issues, they're also looking at, wellness tests, specialized tests, etc., something that is preventive. What could that be as a proportion of sales for you?
So our preventive has always been about 40 to 45% of our overall business. The influenza business is very small. So, I'll not quantify it in terms of numbers, but just to give you a sense of the ramp up, I think week on week, it almost doubles, so as people get more and more awareness around when we had this viral infection wave during the change of season over the last couple of month or so, many people came in and started to do fever panels and influenza panels to, check if they really understand what is going on with their body and their sickness. So that's an encouraging trend overall.
Okay. Rahul, is it just a matter of time till pricing pressure picks up within the specialized testing space? Because aggregators have entered the wellness market or the more routine test market, but they are going gung-ho when it comes to investments as well. So the next leg of investments, I would assume, would be specialized testing. Do you think that that would be the next leg of competition, and it's just a matter of time till pricing pressure weighs in there?
See, wellness is more direct to consumer, so therefore, it's a lot more amenable to price pressures and all of that. And as you compare different packages online versus offline, you may say, okay, for my annual checkup, I'm okay to save a few rupees and actually get it done with an offer. But when you're sick, you really want to ensure that you have the right test. And as the degree of sickness, kind of becomes much more, right? Or when it is a more severe disease, I think very few people are willing to, save a few rupees, but not be sure about the reliability of the test. So I think having been in the market for many, many years, having talked to doctors, having been able to explain to doctors the results, the accuracy, and the procedures that you have followed is much more important than 100, 200 rupee or even a 30% reduction in price. So I think the specialized market is not the same ball game as a direct-to-consumer wellness market.
But what I mean is that eventually there will be investments within that space as well. But just before we finish up this conversation, Rahul, just wanted to understand that, you're a part of Zee, and Zee is an aggregator. And the aggregator model has deep discounting when it comes to the entire diagnostic testing space. So what does your full body checkup cost at this point in time? What does it compare in terms of a discount to the other aggregators?
So our highest running full body checkup is what is called comprehensive with vitamin D and B12. That runs at about 1,500 rupees. I would say it was, we typically give about a 400 rupee discount. So I would say it's about 25% discounting that we do against that. I think that's kind of in line with everybody else on the aggregator side. And actually, if I compare it to Thyrocare also, our best-selling package offline is in that same range as well.
Okay, all right, we will leave it at that. Rahul, thanks a lot for joining in and speaking to CNBC TV18. Appreciate your thoughts on the subject matter at hand, as well as on the company too. That's Thyrocare, both Thyrocare and Metropolis, saying that people are just not testing. Of course, COVID cases are on the rise, but people prefer to sort of deal with it at home with home testing, and symptoms are also milder, so I guess that's a good thing. Let's slip into a quick break on that note. On the other side, we'll put focus on Quess Corp, Tube Investments, South Indian Bank, a lot of stocks surging in trade today. Stay tuned for that.
The very best.
Welcome back. Well, it's definitely quite an active market, at least in the broader markets, which is, currently trading. We have an advanced decline ratio, which is better than yesterday. Yesterday, it was on the negative side. Today, it's on the positive side. So around 1,900 stocks advancing to around 1,000 stocks declining on the National Stock Exchange. Talking about a couple of the broader market stocks, it is sector agnostic at this point. So, for example, Patel Engineering is gaining. That stock is 14.5 odd rupees, but it's up around close to 5 odd percent today. Vimta Labs is very low on volumes, but up around 2 odd percent. We have some amount of gains coming in a couple of these pharmaceutical stocks as well. So Newland Labs, for example, is up around 2.7%. Lupin 2 is up around 2 odd percent. So that seems to be the picture playing out within the broader markets. But let's focus on some more stocks. We learned from sources that Fairfax is raising stake, has raised stake in Quess Corp. Nimesh is here with the details on this story. Nimesh.
Hi, Ekta. So the stock is buzzing in trade, and the fact is that the Fairfax, which is one of the promoter entity of Quess Corp, they've bought additional 4.5% stake via reverse book building, which means that the investors have sold and the promoters have bought in today's trade. So that's the reason, and they've bought at a premium as well compared to yesterday's closing price. They paid a 10% premium, and they've bought this 4.5%. Now, after today's block deal and the stake purchase, Fairfax stake in the company will go up to close to 35%, and the net and the overall promoter holding will go up to close to 56%. As of December, the joint promoter holding was close to 52%. Now, there are two basic promoters in Quess Corp. Ajit Isaac, the chairman, owns close to 22%, and Fairfax, which was owning 30%, that stake will now go up to 35%. The institutional holding is quite high at 48%, so which means that some of the large market investors today has participated in the reverse book building, and they've sold the stake to the promoter entity, which is Fairfax. So, interesting development. At these levels, promoters have bought close to 5% stake at a 10% premium, and they've increased the stake now. So, Fairfax will now own close to 36% stake in Quess Corp after today's stake buying from the institutional investors.
Okay, thanks a lot for that, Nimesh. Well, moving on, shares of South Indian Bank are under pressure after the MD and CEO has informed the board that he will not seek a reappointment. So there's, of course, that uncertainty there. Speaking earlier to CNBC-TV18, Murli Ramakrishnan says the decisions are purely personal and an agency has been appointed to start searching for the next candidate. Take a look.
Not seeking for reappointment for the next term. So we still have 6 more months, and I'll continue to carry out the initiatives which has been taken over the last last couple of years, and we will take it to the next level. So therefore, just to clarify, I am not quitting. I am actually completing my term and not seeking reappointment for the next term. Absolutely no professional element. I mean, it's purely personal. I just wanted to go and spend time with family. The board has been extremely supportive, and obviously the kind of changes which I have been able to make with the in the organization is with the complete support of board and complete support of the entire employee. See, we have just started the process. In fact, the announcement was made yesterday, and we have just appointed an agency to start the process. So clearly, the idea is to ensure that the competent person is selected, and he or she has to have some overlap so that the transition happens very smoothly. The endeavor is to ensure that all the initiatives taken are smoothly transitioned, and the new person takes complete charge of taking it to the next level. If you ask me what is the ideal overlap period, there is nothing like that, but typically I think 3 to 4 months is a good enough period for anyone who has got experience of running the bank to really be on top of the changes which are happening and to take it to the next level.
Right, that's about South Indian Bank down about 14%, but clarification coming in from the management out there as well. Tube Investments is one of the stocks which is trading in the green, as Multiples Private Equity has invested almost 270 crores in TI Clean Mobility. Sonia, what does this mean for the company and the group?
So, you know, this company is going big into the clean energy, into the electric vehicle space, right? We know that. And the news flow today is that SBI and Multiples Private Equity have invested in the company. So, Multiples Private Equity, which is the Renuka Ramnath run private equity firm, it has invested 266 crores in TI Clean Mobility, and SBI has invested 133 odd crores. Now, if you remember last month, Multiples came out with a release where they said that they are looking to invest up to 1,200 crores in TI Clean Mobility because they are very bullish on the electric vehicle, commercial vehicle space. Now, TI Clean Mobility is a wholly owned subsidiary of Tube Investments, which is a part of the Murugappa Group, as we know. It is into the design and development of electric tractors and electric heavy commercial vehicles. And the company has, is looking to raise a total of 3,000 crores by the month of March 2024 to expand their electric vehicle business. Out of this 3,000 crores, up to 1,200 crore contribution was expected to come in from Multiples itself. Now, as I said, in our interaction with Renuka Ramnath last month, we understood that Multiples is very bullish on the electric vehicle, commercial vehicle space. So this is the first tranche perhaps that has come through, 266 crore investment, and hence the stock is up and about. Remember, the stock is not too far away from its 52-week high. It's about 20% away, less than 20% away from its 52-week high, and doing pretty well, holding up in what has been a very volatile market. So, a positive news flow coming in here.
Okay, all right, Sonia, thanks very much for that. So that's on Tube Investments. Stock is up around 1.5%. Time for a break now, but up next, technicals. Aditya Agarwal will be joining in.
Welcome back. We're at the low point of trade at midday right now, 16,951. The Nifty is just about broken into the red. The Sensex too is down by about 50 odd points. From the highs of today, we have seen a near 100-point correction. So good time to get in some F&O perspective on the market as well. Over the last few trading sessions, one thing has happened. While we're trading in a narrow band, the highs have gotten lower for the Nifty. If you just take a look at it, on a Monday, we had the high of the Nifty at 17,091. On Tuesday, that went lower to 17,062, which was yesterday. And today, the high on the Nifty has been 17,049. So the highs have been lower. The Nifty Bank, while it is outperforming, it is still facing some resistance around the 200-day moving average. Congestion above that and not convincingly staying above those levels as well. So those are a couple of things we'll have to watch out for. The only positive today is that the mid-cap index is outperforming, and it's outperforming ahead of the first weekly options expiry that we will see on that index. So to that extent, the second half will be important for the mid-caps as well. Just keep an eye out on a couple of these options which are active today. On the way up, 17,000 calls sees a fair amount of writing, and that's primarily because most of the bulls believe that, or rather most of the bears believe that yesterday's high would be a bit of a resistance, and levels upwards of 17,000 will be prone to selling. So 14 rupees premium on offer out there, nearly a crore shares added since morning. However, because highs have been lower doesn't mean that lows have been lower as well. Lows have actually been higher for the last couple of trading sessions. So do we see some support coming in closer to the 16,900 mark or not? Bulls are betting on that because that's where the lows over the last couple of trading sessions have been. And we've seen a fair amount of writing, almost a crore shares written at the 16,900 put as well. Those who are writing both the 16,900 put and the 17,000 call are playing for a 25-point range above that 17,000 mark and below that 16,900 mark as well.
Okay, thanks a lot for that. Well, let's get Aditya Agarwala of Invest for Edu, who joins in now with some trading strategies. Aditya, that's the million-dollar question, right? Is there any reason for this market to break above the trading range? 16,800 seems like a firm line in the sand on the downside. On the upside, unable to get above that 17,500 mark. What's your best guess, and what are the ideas for the rest of the day?
Good afternoon, Sonia. Thanks for the show. I believe we are approaching the time when we will eventually break out of that range, because it's been almost 2 weeks that we are trading in this narrow band. Before 17,004 and Sonia at 17,200, which Nifty needs to take out decisively, which it hasn't done so in last two trading sessions. And as you mentioned, on the downside, 16,800, 16,900 is acting as a key support area. So I believe markets are trying to farm a bottom around these areas, maybe a temporary one, too early to call it a permanent bottom yet. Maybe a temporary one, and I believe once it starts to trade beyond 17,200 is where we will see when we will see a decisive up move on the markets, at least till 17,400, 500, the level that you mentioned, and maybe if that is taken out, then beyond that. At the moment, I would avoid trading in the index because it's become very choppy, to be honest. Though VIX is pointing towards some kind of a stability coming back in the markets, it is cooling off. But again, it is becoming difficult to trade the market. So at the moment, I would avoid trading the markets, especially the Nifty and the Bank Nifty both. Maybe if it starts to trade beyond 17,200 decisively is when I will look at getting into the market long. Having said that, yes, there are pockets which are outperforming.
Okay, go ahead, Aditya.
Yes, Ekta. So as I mentioned, there are pockets which are outperforming, and as Mangalam pointed out, mid-caps are outperforming in trade today. So cement is something which is catching my eye. Most of the cement stocks are doing well for itself. The entire basket is doing well. So JK Lakshmi Cement is something which is looking very attractive on the charts. I see a clear breakout from a downward sloping trend line. Volumes are good here, so one can go ahead and initiate fresh longs for a target of 810 on the upside with a stop loss at 720 on the downside. The second stock is Alchem Laboratories, something which has witnessed a decent correction and now breaking out of that consolidation. So traders can definitely latch on to the stock at 33.50 on the upside with a support on the downside at 32.30.
Okay, all right, Aditya, we're going to let you go on that note. Thanks very much for joining in and giving us all of those cues on the technicals. It is definitely positive news which has come in on Zee Entertainment, where Zee and IndusInd Bank have reached a settlement over the insolvency issue. And this is basically under the settlement agreement. Zee has paid the first tranche of the settlement amount today itself, apparently the settlement has taken place this morning, the settlement agreement. We're going to get Ashmit to talk more about this, but as you can see, the stock is reacting positively. Stock is up around 2%.
So it's off the highs also because, this was all largely expected because of the conversations that were going around before the NCLAT hearing that there would be a settlement already. So now the big trigger to watch out for will be the NCLT hearing, which will happen in a few days from now, and that will be on the merger of Zee and Sony. So the NCLAT hearing was largely digested by the street after the overall order was passed, and then there were reports that they are reaching settlements just the way they have paid their other creditors as well. The question now is, with the NCLT hearing, is the merger on track or not?
Okay, so at least there is one positive piece of news, which is, and maybe, one sort of stone which is out of the way for Zee. But nonetheless, the stock is up around 1.5% off the day's high, like Mangla mentioned. We'll take a short break. Be back with more. Stay tuned.
Welcome back to Halftime Report on CNBC-TV18. Well, let's do one thing. Let's get you a quick update on what's happening in the market right now. We have the market absolutely quiet, but still holding up with gains of now, and in fact lost all of its gains in the last half an hour. So getting to absolutely flat terrain. But let's also focus on the retail and FMCG space. Deloitte in its retail and FMCG report states that the retail sector is finally seeing a resurgence after COVID-19. In fact, FMCG companies and retailers are looking at major expansion plans as well. To discuss this and demand trends, we're joined by Rajat Wahi, the partner at Deloitte India. Rajat, thanks a lot for joining in. So can you tell us, I mean, of course, your report is pretty exhaustive. You talk about what's happening in online versus the offline business. But I want to know particularly what's happening in Tier 2, Tier 3 and the rural market in terms of retail, because that was a space that got hit the hardest in COVID and it's not really returned to normalcy also because inflation is pinching pockets quite a bit. Any nuances on what the demand trends there look like?
So I think, firstly, thank you for having me on the show and good to be here. I think what we are seeing currently is that, because of the K-shaped recovery and the pressure of inflation, the demand in the rural markets was a bit muted, and especially not just rural, but I think lower income, even in urban areas, have seen a muted demand. But I think with a lot of the investments going into the industry, both from a infrastructure projects point of view, what the industry is also doing. I mean, when I talk to a lot of the retailers, FMCG players, all are looking at massive expansion in Tier 2, Tier 3 cities, into the urban areas. Also, just talking to retailers, they're looking to almost double the footprint over the next 3 to 4 years in terms of their reach. A lot of that growth is going to come from Tier 2, Tier 3 cities as well, where they are opening up new stores. So the sense is that there has been obviously the last 3 to 6 months has been quite challenging from the rural markets, especially because of inflation. But the trend seems to be that everybody is looking to invest while looking at the next growth burst that is expected to come over the next 2 quarters.
Right. Rajat, we'll request you to just hang in there because it's breaking news right now. We do have Ashmit with us on the Zee Entertainment case. Ashmit, looks like decks are cleared for the merger now.
Well, Zee will be breathing a sigh of relief. What we understand is that a settlement has been reached between Zee on one hand and Indices Bank on the other. In fact, one of the lawyers, as a part of the arguments before the NCLT, said that the agreement was reached as of 4 a.m. this morning. So, burning midnight oil, but it seems to have yielded results. The NCLT has recorded that there is a settlement reached between the two sides. As far as the settlement contours are concerned, while the outstanding claims of Indices at the very outset was around 83 crores, the settlement amount has not been disclosed. That's under wraps. That's been served before the NCLT. What we can, however, tell you is that, number one, as a part of the settlement agreement, Zee has already paid first tranche of settlement sum to Indices Bank. The second tranche will be paid as of 30th June, or 7 days of the Sony-Zee merger scheme approval, whichever is earlier. So that's the second part that needs to be borne in mind. As for what Zee walks away with as a part of the settlement agreement, the biggest takeaway here is that Indices Bank will be withdrawing its objection before NCLT Mumbai, withdrawing its objection to the Sony-Zee merger. So that is something that Zee walks away from in return of payment that they've made. This is the big takeaway here. NCLT has recorded that both the sides have reached a settlement agreement. What's important is that, subject to payment of the second tranche, this issue will be pending and will be taken up in the month of July. So a big clearance list as far as the Sony Zee merger is concerned. The decks are cleared now. The big objection that was in the way, the IndusInd Bank insolvency case, that has been settled, at least in part, by Zee.
Okay, all right, Ashmit, important development coming in there. Thanks very much for that. So that's Zee up around 2.6%. But let's get back to our conversation on the FMCG and retail space with Rajat Wahi of Deloitte. Rajat, you were talking about the rural demand and the fact that it had been sluggish, but you are probably more optimistic on it. Can you give us a sense in terms of whether you had to break up urban and rural growth estimates this year? What would they be?
So I think that if you just look at all the data coming through for the last 2 quarters, looks like the rural, while I know if you just go back to pre-19 and pre-COVID, rural demand always, outstripped urban demand 1.5 times versus urban demand. But coming in 2019 end itself, we started to see a slowdown in rural. That obviously got to some extent corrected because there was a lot of migration from urban to rural during 2021. But then we had the reverse migration as urban markets opened up. So rural again sort of saw a big tail off. And I think what's happened is that because of inflationary pressures, because of fuel prices increase, and because of prices of commodities, and also and I don't think we should just divide it as rural and urban. It's low income, whether it's in urban cities, also in our tier 1 metros, there is an impact on people who are basically low income because it directly has an impact on your discretionary spends. So I think it's not just a rural urban divide, it's a low income, higher income divide where people which have obviously who have higher income have had more staying power. And for the rural customers or for customers with low income, not just the inflation, but your interest rates going up has a direct impact on your EMIs. All of that has an impact on the overall consumption. The expectation going forward. Sorry, go ahead.
Go ahead. You said the expectation going forward.
No, I'm just saying that the expectation coming out of this, given the last budget that we had, the sort of focus around big capex spending, especially around transportation, logistics, creating all these hubs. Also, a lot of work around the agricultural sector in terms of creating large sort of large employment through Make in India and various PLI schemes. The expectation is that we are going to start to see a big revival in overall consumption, which will be lower income as well as the higher income as well. And I think that will impact both rural and urban areas. And I think we can already sense that when we talk to our clients, when we look at their growth plans for the next 12 to 18 months or 24 months, very, very aggressive. Everybody's looking to expand capacity, expand distribution, expand coverage. So all of that is basically a good strong sign that we are going to hopefully start to see a good revival from the next quarter onwards.
Right. Just out of curiosity, who do your clients be? Are these the incumbent large players or are these the new age D2C companies?
No, I think it's across the board. I think my sense is that it's the incumbent, the large players who are going to be the largest beneficiaries of a lot of the growth. I think the D2C brands who have sort of launched over the last 12 to 18 months may find some headwinds because of issues around the next round of funding and support, etc. And they are looking to also figure out how do they expand now from the modern trade and e-commerce into the GT or general trade, because that's where a lot of the tier 2, tier 3 expansion will come from.
No, the reason why I asked you that is, do we really have that kind of appetite in our markets to actually have consistent average order values upwards of 1,000 with growing number of orders? There are higher acquisition costs via the D2C model and online customer acquisition. And there is funding winter for the new players too. So amidst all of this, where does the future lie?
So I think you're right. I think on the side of as far as for funding is concerned, there is a challenge because of the overall global economic situation and the drying up of that. And that's why I said that D2C players, new players or players who are just launching or who have launched over the last, say, year and a half, will find it a bit more difficult to grow because their next round of support may not be there. And I think that's why we are seeing a lot of the established players, the likes of the ITCs, Maricos, Britannias, looking at acquisitions of various D2C players to help them to do the next, or not just acquisitions, but partnerships, maybe even investing into the various D2C brands to help them, in the next growth phase. Because remember that India, whatever we talk about in terms of e-commerce, modern trade and general trade, 85 or 86% of Indians still shop in the general trade, mom and pop stores. E-commerce accounts for only 4 or 5% of FMCG, and modern trade between 8 and 10%. So majority of the expansion, if you go to the next stage beyond the first two channels, is to go to the general trade, which means you have to set up distribution networks. How do you do that? So all of that requires a lot of funding, and this is where I think that some of the D2C players may find it very more difficult to grow versus the established players there.
Okay, all right. We'll leave it at that. Thanks a lot, Rajat. Very helpful actually to understand what's happening both in terms of the retail channel as well as, in the rural market, which was under quite a bit of pressure. Let's slip into a quick break. On the other side, our commodities segment, Manisha Gupta joins in. She has with her Peter Maguire, the CEO of XM Australia. Stay tuned.
Welcome back. Joining us on the show now is Peter Maguire. He's CEO XM Australia. Peter, hi, good to have you. And I want to talk about the crude oil prices where we are trading at a 2-week highs. We've seen 4% of gains come into this week. And a lot of factors now seem to be supporting, whether it's about the US inventories, which are showing a 6 million barrels of a decline as per the API data, or the export haul that we've seen come in from Turkey this week.
Well, good afternoon, Manisha. Yes, I think that, and you could probably add a little bit as far as horsepower, maybe the banking sector, and, many traders are saying, is that behind us? And in turn, that bounce to the upside that we've seen this week. So, yeah, take on board, add all those ingredients in, and it's been a dynamic couple of days for trading. And have a look at it. Brent's nearly just above 79 a barrel. It's onward and upward.
Are you looking at further gains now coming in? Because we've seen a range of 70 to 88 in the first quarter of this year. How do you see March closing? What's your sense on the month of April?
Well, I think first off, Manisha, you'll see a little bit further up for, we've only got 2 days of trade left up until Friday Eve or Friday for the States. So, I won't be surprised to probably put another buck on it, maybe $1.50. There's that side. So that'll square up the end of the quarter, end of the month and end of the week. If you're looking where we are for April, I think there's going to be a build as far as price. And if you're looking back over March, it's been incredibly volatile from those highs that we had on the 6th of March, collapsed to the 17th of March, and then we've seen a really strong move to the upside since then over that 12-day window. So, I think April's going to continue, push up, and I think third and fourth quarter are going to be dynamic for the energy sector. I think you're going to see higher prices.
All right. Peter, how much would you agree with various banks and reports? And as you said, you expect dynamic third and fourth quarter. So what kind of highs or what kind of range are we working with then?
Well, I think over the second quarter, Manisha, and that starts next Monday, so that'll be the third. I reckon you're probably sometime in that quarter, I won't be surprised to take possibly 90 out for that Brent in that, that 13-week window. And leading into third quarter and fourth quarter, well, I think that's where the big boys, the analysts, are saying 95 is where you'll see, some sort of settling as far as price. And I won't be surprised to take that out. I'm keeping an eye very much on the Turkey situation or the Iraq situation and the Kurds, and the situation also with Russia and what's going on. That just seems to be protracted. So, they're starting, all things are starting to create a little bit of geopolitical tension. And I think it could be, fireworks over the next couple of quarters.
Is there anything that you would want to watch out, Peter, for the OPEC and allies meeting in the first week of April for?
No, I'm keeping an eye on Manisha. Look, I think there's enough crude out there, and I think they're fairly happy and settled at these sort of prices. Anything above 80 or anything near 80, and it's rubbing their hands with glee. So producers are happy, consumers are getting crushed. But I think producers are going to win this battle in the short run. So, I think OPEC are relatively satisfied as far as price.
Okay.
Okay, all right, Manisha as well as Peter. Thanks very much for getting us all of the updates in the commodity space. Need to take a short break. We'll be back with more. Stay tuned.